This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
Stocks break out. Records are being broken on Wall Street, and that may be overshadowing another equally important event, a market rally worldwide.
Face off. Boeing's workers will vote tomorrow on whether to unionize in one of the least unionized states in the U.S.
And a Valentine's Day breakup. Cigna terminates its merger agreement with Anthem, and now it's getting really ugly. Those stories and more tonight on Nightly Business Report for Tuesday, February 14th.
Good evening, everyone, and welcome. Stocks keep on climbing. The major indexes notched new records as investors liked the optimism expressed by the Fed chief on the economy. On Capitol Hill, Janet Yellen signaled that a rate hike could be discussed at the central bank's meeting next month. More on that in just a minute. Now, usually that would cause stocks to fall, but not today. The Dow Jones Industrial Average was up 92 points to 20,504. The Nasdaq added 18, and the S&P 500 rose 9, its 15th record close since the election. And it's not just the U.S. in rally mode. Bob Pisani tells us which other stock markets are on the rise.
It was another day, another new high in the U.S. stock market. But the focus on the breakout in U.S. stocks is overshadowing an equally important event, a global stock market breakout. While the U.S. is up roughly 4% for the year, the rest of the world is doing even better, with new highs in regional ETFs like Latin America and Japan and Europe. What's going on? Well, first, it's not just the U.S. economy that's getting better. After years of stagnation, Europe is slowly improving. Japan is slowly improving. That's helping corporate earnings overseas. Second, as inflation is starting to pick up, it's powering a reflation trade that's lifting prices on everything from commodities to finished goods, which is lifting profits as well. Indeed, the stock markets of countries with a focus on commodity production like Peru and Chile and Brazil and Australia are at new highs. Now, what would stop this rally? Trade wars would be a big problem. That's an issue for many concerned about the Trump administration's rhetoric on tariffs and border taxes. For the U.S., it would be a delay or watering down of tax reform, or if U.S. corporations disappointed on higher earnings expectations. And the Fed's not in the clear either. After keeping rates low for years, they clearly want to raise rates, but if they do it too fast, it could stall the economic recovery and the stock market rally. It's a delicate balancing act because raising rates will affect everything from mortgage rates to credit card payments. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
More detail now on the testimony by the Federal Reserve Chair Janet Yellen. Answering questions from a panel of senators, she expressed optimism over the job market and rising inflation. She also signaled that the Fed could consider raising short-term interest rates at its policy meeting next month. Steve Leisman tells us now how serious that possibility is.
Fed Chair Janet Yellen in Senate testimony ever so slightly raising the chance of a rate hike by the Fed in March, saying the economy was closing in on the Fed's goals for inflation and employment. But her words didn't seal the deal. They weren't enough to convince markets that March has even a 25% chance for a quarter-point hike.
Precisely when we would take an action, whether it's March or May or June.
Right.
I know people are focused on that. I can't tell you exactly.
They are, just so you know, they are.
Which meeting it would be. I would say that every meeting is live.
Yellen stuck to her stance that it's way too early to say how economic policies from the Trump administration would change the Fed's rate or economic outlooks. She added that she agrees with core principles of reforming the Dodd-Frank regulatory reform law that President Trump listed in an executive order. Also, she agreed with the need for reducing regulation.
Considering regulatory burden and looking for ways in issuing rules and reviewing outstanding rules, constantly looking for ways to mitigate burden, I think is an important goal, and it's one that we will strive, have strived, and will strive to achieve.
But Yellen also sided with Senator Elizabeth Warren that the data did not show much impact on lending or on bank profits from tougher banking rules, suggesting she's not in favor of a major overhaul. For Nightly Business Report, I'm Steve Leisman.
The president of the Richmond Fed says the next interest rate hike should come sooner rather than later. Jeffrey Lacker said rates need to rise more quickly than the market now seems to expect. Mr. Lacker added that the central bank does not want to be in the position where it has to raise rates more rapidly later on if there is substantial fiscal stimulus out of Washington.
And new evidence today that inflation is ticking higher. That's something the Fed pays a lot of attention to. The Producer Price Index, which measures the change in prices that U.S. companies receive for their goods and services, rose 0.6% in January. That was its largest gain in 4 years. The increase largely reflects the advance in commodity prices like oil, but a strong dollar kept underlying inflation tame.
Confidence among small business owners is at its highest level since 2004. The National Federation of Independent Business says owners are increasingly optimistic about the economy. Nearly 1/3 have reported job openings that they can't fill, and that is the highest reading since the recovery.
And today, President Trump's pick to lead the Small Business Administration was confirmed by the Senate. But who is Linda McMahon, and what does Main Street want to see her do? Kate Rogers reports.
America's new Small Business Administrator is promising to be an advocate for change at the agency.
It is my great privilege to be here today.
At her confirmation hearing, businesswoman Linda McMahon spoke out in support of deregulation, financial literacy, growing the federal contract program for small businesses, and advocating for women and minority-owned businesses. She also drew on her own experience launching a business from scratch.
I am proud of our success. I know every bit of the hard work that it took to create that success. I remember the early days when every month I had to decide whether I should continue to lease a typewriter or if I could finally afford to buy it.
She is best known for co-founding the WWE with her husband, Vince McMahon, more than 30 years ago. It's since grown into a publicly traded company worth more than $1.5 billion. McMahon stepped down from WWE in 2009 and had 2 unsuccessful bids for the Senate in Connecticut. Now that she's confirmed, nonpartisan advocacy groups are hoping McMahon will work quickly on their behalf. For the National Small Business Association, taxes and access to capital are top issues.
Certainly reduce some of the paperwork required and the time frame for getting loans. Increase the cap because a lot of small businesses need more capital in order to create jobs, expand the businesses. And if small businesses are the ones that are the backbone of the country.
Meanwhile, the Small Business and Entrepreneurship Council would like to see the agency get back to its mission of education and training. Beyond that, regulatory reform is on the bucket list.
The big issues of concern for small business owners are tax reform, the complexity of the tax system, a burdensome tax code, that the tax code be internationally competitive. Certainly on the regulatory side, they are burdened by overregulation, and there's a lot of uncertainty with regard to some of the existing regulations.
Main Street is hoping the former wrestling executive will be fighting for the little guy. For Nightly Business Report, I'm Kate Rogers.
So from small business to big business, CEOs from some of the country's largest retailers are heading to Washington tomorrow. The chief executives are meeting with President Trump to discuss the economy and taxes. It's also widely expected that they will make their case against the controversial border adjustment tax. The possible 20% tax on imports, they say, would raise consumer prices and hurt their business. The CEOs are from Target, Best Buy, The Gap, AutoZone, among others.
Well, that border adjustment tax is considered a key part of the yet-to-be-proposed Republican tax plan. It would generate a lot of revenue to pay for such items as lower corporate and personal income taxes and infrastructure spending. John Harwood following the story for us from Washington. John, how is this border adjustment tax being received on both sides of the aisle, and what do we know about how the president feels about it?
Well, you can strike Democrats out of the equation. They're not relevant at this point. They're not involved in the discussions. But on both sides of the Capitol, there are hugely divergent views. House Republicans are very much for this. Senate Republicans are reluctant and agree with the retailers that this could hurt consumers.
So the overarching theme of tax reform, can that be accomplished without the border adjustment tax or not?
Yes, but the rates cannot be lowered as much as the House does in their plan. They would take, in the plan that's being translated into legislative action or legislative language, is being taken down to 33%. You can't get that much progress if, in fact, you don't have that $1 trillion over 10 years of revenue.
What do we know about where the president stands on it, John?
Well, this is the key issue. He initially said that it was too complicated. Later, he took that back, but he has not sent across a strong signal. And when I talk to Republicans, they say only a strong signal by the president can push this over the finish line. If not, those objections from Senate Republicans are likely to kill it.
Now, the market is looking at the prospect of tax reform and the broader economic agenda, where some of that would be, funded by, for instance, infrastructure spending. So where do we stand on some of those broader issues?
Well, you really haven't gotten much progress at all legislatively so far from Republicans. They have passed a budget resolution, but they're still trying to work up their plan to repeal and replace Obamacare. That we do not have an infrastructure plan, we don't not have the replacement plan, and we don't have a tax plan. So there isn't consensus. And on the key issue of whether or not deficits will be expanded to finance some of these things, or whether they're going to be held harmless where they at the level they are now, don't have answers on that either.
All right, John, a lot of moving parts and a lot of distractions for the White House these days.
Right.
John Harwood in Washington.
Still ahead, big labor faces a big test tomorrow, and why Boeing is at the center of it all. On this Valentine's Day, there were two big breakups in the health insurance industry. First, Cigna and Anthem are walking away from their proposed $48 billion merger. Cigna says Anthem must pay nearly $2 billion for terminating the deal and is suing Anthem for $13 billion in damages. Anthem is attempting to appeal. The second breakup, Aetna and Humana. Those two companies are walking away from their $34 billion merger. Aetna will pay Humana a $1 billion breakup fee. The decision to terminate comes after federal judges blocked the takeover on antitrust grounds.
Organized labor faces its first big test since the election of Donald Trump. Tomorrow in South Carolina, workers at Boeing, who are not part of a union, are voting on whether to join the International Association of Machinists. As Phil LeBeau reports, a yes vote would be historic, given the location and the state of unions in America.
In a state where blue-collar workers are typically not in a union, Boeing's plant in Charleston, South Carolina, is a test of whether attitudes of workers in the South are changing. Nearly 3,000 of the 7,500 workers at Boeing's plant will vote on joining the International Association of Machinists. If they say yes, they'll join Boeing workers in the Seattle area who have long been represented by the union. It would also send a message to President Trump, who as a candidate courted blue-collar workers, but for the most part, he did not embrace union leaders. After his election, he feuded over Twitter with a steel worker at the Carrier plant in Indianapolis, and he blasted the local union, saying if it was any good, it would spend more time working, less time talking. And since taking office, Trump's met with numerous CEOs at the White House about adding jobs, but he has seldom mentioned fighting for organized labor. Does that matter to workers at Boeing in Charleston? Probably not. Union votes typically come down to other factors, like pay, benefits, and most importantly, job security. When the final vote is tallied, Boeing could find itself with even more members of the Machinist Union. And for the first time, they would be at a plant in South Carolina, which is increasingly important in Boeing's growing production of commercial airplanes. Phil LeBeau, Nightly Business Report, Chicago.
General Motors is thinking about getting out of Europe, and that's where we begin tonight's Market Focus. The automaker said it has entered into talks with France's PSA Group regarding a potential sale of GM's unprofitable Opel business. PSA, which owns Peugeot, would become Europe's second largest car maker if it buys GM's Opel and Vauxhall brands. Shares of GM rose about 5% to $37.24. Profit and sales at T-Mobile rose as that company benefited from an increase in postpaid phone subscribers. The results topped analysts' expectations, and T-Mobile's CEO said the results set it apart from its competitors.
What's important is we're the only wireless carrier who had double-digit service revenue growth, overall growth, customer growth. We grew service revenue 11% in Q4 year over year. The whole industry's been declining. Nobody has grown service revenue for over 3 years.
Shares rose 1% to $61.60. Generac said strong demand for portable and standby home generators caused sales to rise above expectations. The maker of small engines also posted higher profits. It was better than expected. Still, shares fell more than 6.5% to $39.80. And the Mexican peso dragged down results at Dr. Pepper Snapple. The beverage giant said that currency's volatility hurt revenue, adding that could continue through the year and dent its earnings. For the latest quarter, the company posted revenue that matched estimates, while its lower profit disappointed. Shares were down just a fraction to $93.07.
Mattel said it was expanding its partnership with the Chinese e-commerce giant Alibaba to sell its products to Chinese consumers through one of Alibaba's marketplaces. The maker of Barbie and Hot Wheels also said it would work with Alibaba to create new products. Mattel shares up 16 cents to $25.69. Alibaba down nearly 1.5% at $101.59. Meantime, Discovery Communications said a strong dollar and higher international costs impacted results in the latest quarter. Still, the company, which operates cable channels Animal Planet and TLC, posted higher than expected profit and revenue that was in line with expectations. Discovery shares down, though, more than 1.5% at $28.53. The insurance giant AIG said a nearly $6 billion pre-tax charge caused the company to post a wider loss. But the outfit said it would add $3.5 billion to its existing share buyback program. Shares initially fell in after-hours trading. They finished the regular session, though, up 1% at $66.89. And Express Scripts saw revenue fall and miss estimates in its latest quarter. The pharmacy benefits manager, which is responsible for negotiating drug prices directly with drug companies, did post higher profit that beat expectations. Shares initially fell after hours during that trading, but ended the regular session up a fraction at $69.63.
President Trump's executive order banning travelers from 7 mostly Muslim countries may be on hold, but it's still causing trouble and could actually cost millions of dollars for some investors in a popular immigration program designed to create U.S. jobs. Diana Olick explains how that order is rippling through the real estate sector.
Jihad Masri is a physician in Dubai who wants to help his son fulfill a dream to become a doctor just like him. So much so that he invested $500,000 in a U.S. program that offers green cards for investments that create jobs. Masri, who has lived in Dubai with his family for 20 years, was accepted to the program last summer, but the final interview was put on hold when President Trump signed the travel ban.
It let me more worry, actually. As you said, nothing is certain. We cannot plan anything because moving family there, buying house, arranging everything, schools, university, you have to make a plan, you have to invest, you have to do a lot. But now nothing is certain.
Developers use the so-called EB-5 program to get low-cost funding. Each $500,000 investment must generate at least 10 jobs. President Trump's son-in-law and White House advisor Jared Kushner used $50 million worth of EB-5 money to develop this rental apartment complex in New Jersey. The program has generated thousands of jobs, green cards, and now uncertainty.
It's caused a lot of instability in the market, right? So a lot of people are very concerned about what is going to happen next in U.S. immigration. Is it going to affect me? What is the next thing that he's going to put in place?
Malik and her partner Shay Zamanian are attorneys who assist investors in the EB-5 program.
There's a lot of insecurity in understanding the current administration and their ability to rewrite executive orders so that perhaps it is more narrowly tailored.
Masri's son, a straight-A student, has already been accepted to 2 U.S. universities, but a school-sponsored trip to Boston to see more schools was canceled when President Trump signed the order.
I felt bad and I felt unfair. Why? What mistake we did, or I cannot find explanation.
Masri is understandably starting to have mixed feelings about the program as a whole. He has no idea if he'll ever get his family to the U.S., if there'll be another executive order banning them, or even if he'll ever be able to get his $500,000 back. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about the immigration order and its potential impact on real estate, head to our website, nbr.com.
Coming up, is that app on your smartphone, the one that you use all the time, actually leaking personal information about you? That story is next.
And here's a look at what to watch for tomorrow. Retail sales, consumer prices, and industrial production are just a few of the economic reports scheduled to be released. Dow component Cisco reports its earnings, and investors will be looking to see if its big investments in software are starting to pay off. And President Trump is meeting with Israeli Prime Minister Benjamin Netanyahu at the White House. That's what to watch for on Wednesday.
Well, the airline industry turned in its best performance in decades last year. According to the Department of Transportation, U.S. airlines canceled just 1% of scheduled flights in 2016, lowest cancellation rate in 22 years. The number of complaints about mishandled bags dropped more than 2.5% to the lowest level ever recorded, and the percentage of passengers bumped fell to its lowest mark since 1995.
Toshiba's troubles are mounting. The Japanese company said it plans to write off more than $6 billion. The embattled technology conglomerate will withdraw from the business of building nuclear power plants following its acquisition a decade ago of Westinghouse Electric Company. The company's chairman is also resigning after weeks of speculation. Toshiba also said that the estimates released today could change, quote, by a wide margin because of uncertainties.
An arrest warrant is out for Samsung's second-in-command. J.Y. Lee is wanted by South Korean prosecutors as part of its investigation into a graft scandal. A first attempt to take him into custody was rejected due to a court order of lack of evidence. Korea's biggest company and its heir apparent are at the heart of an investigation into influence peddling that's led to the impeachment of the president of South Korea.
If you own a smartphone, you likely use apps every day. But there are things that you should know. That app you trust could be leaking personal information, and it might not take an experienced hacker to find it. Andrea Day with what you should watch out for before you download.
From games to news to navigation.
Turn left onto Lydecker Street.
The global app business tops $140 billion a year, with, get this, more than 10 million downloads every hour. But with each download, according to experts, comes the risk of your private information leaking out.
Maybe it's leaking your username, your password, and your credit card information just by you hitting a single button. Anything that they may have put into that tool is vulnerable.
Michael Covington is a VP at the mobile security firm Wandera. Their recent study uncovered more than 200 mobile apps and websites leaking personal data.
As an information security professional, was not aware that this many brands were not protecting that information.
Major brands we won't name here, but Covington says his group alerted the app developers.
I've seen some of the parties usually react by having a new app or a new website out within 24 hours. And in other cases, they don't even pick up the phone. There's so much demand for each service provider to have an app available for their customers that there's a push to accelerate their time to market.
Some of the findings, close to 60% of all leaks coming from news, sports, and shopping apps. And 80% of the top 50 adult sites were found leaking personal data.
But what was really surprising was that about 85% of the data leaks that we saw actually included a password. If you think about the combination of a username and a password, that's all that you need as an attacker to get access to everything else that might be in an account.
And he says fake Wi-Fi hotspots where hackers pretend to be a trusted network are on the rise, making the unsecured info easy to grab.
There is no attack required on a mobile device when it is freely giving away information in an unprotected way.
His advice? Think twice about the type of info you enter.
A company that's providing a free news feed shouldn't be asking for credit card information, dates of birth, and social security number.
And his other advice is to read the reviews before you blindly trust any app, especially one that's just landed in the App Store. Don't be patient zero. Give the app some time to sort the kinks out before you try it. For Nightly Business Report, I'm Andrea Day.
It's kind of scary.
I think I'm way too trusting of all of these things.
You are very trusting.
I'm a trusting guy.
I'm
Happy
not.
Valentine's Day, by the way.
That's right, and you too.
All right.
And to our lovely spouses.
Yeah.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks from me as well. I'm Tyler Matheson. See you tomorrow.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt. To move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.